This is Maria Bartiromo's Wall Street.
And happy Easter weekend to all. Welcome to the program that analyzes the week that was and helps position you for the week ahead. I'm Maria Bartiromo. Trump Media was the belle of the IPO ball in this shortened trading week. The parent company of Truth Social surging 24% after its stellar debut on the NASDAQ on Tuesday. Former President Trump says it's more than just a stock.
Now it's public, and the stock has gone through the roof. And really, this is, I think, in the true sense, this is really it's a great sign of where the people in this country stand. It's almost like a poll, but you see how hot it is. It's one of the hottest stocks that anybody's ever seen. And I'm very honored by that.
But many on Wall Street are questioning the company's fundamentals. It has fierce competition, of course, from other social media companies like Meta, Snapchat, X, who all raked in billions in revenue last year. Also, they have many more millions of active monthly users worldwide than Truth Social does. Despite the strong debut, shares of DJT fell 6% on Thursday, fueling the critics' concerns of volatility to come, with some on Wall Street comparing shares of Trump Media to meme stocks. Joining me right now is Trump Media and Technology Group CEO, Devin Nunes. Devin, great to see you. What a week you had. Congratulations to you. Looks like President Trump has $5 billion week. How do you respond to the criticism?
Well, there's always going to be critics because, we're doing something that no one's ever done. This whole company is based off of opening up the internet, giving people free speech, but doing it in a way that we don't use the 30 or so companies that are out there that have destroyed other startup tech companies in the past. Maria, you're very familiar with Parler. That was complete. It was a multi-billion-dollar company in terms of its potential, and it was destroyed overnight. And millions of Americans were kicked off of social media. So, a lot of people. The way I look at this is that we're trying to take the best of all those little icons that you put on your screen. So whether it's TikTok or whether it's Twitter or whether it's Facebook, we're putting that all into one app. But that's not all we're doing. As we've said publicly. We are looking at streaming and how we incorporate streaming into our app. And past that, we're about the entire ecosystem. That's what we're building. That's what we're going to continue to build. And the only other point I would say that I think is important, just as we start off here, is that we were held up for 2 years. So we were essentially an R&D company on a very small budget, building out something that no one's ever built before, not using these big companies. And we did that with very little money because we were held up for 2 years. And so we effectively are now kind of a true startup. We're really a true startup that has access to the capital markets. Zero debt, cash in the bank with a lot of plans on the way.
Yeah, so let's talk about that, the fundamentals, because you've reported, according to the Securities and Exchange Commission filings, the company has not made money yet. But you're talking about plenty of cash and no debt. How do you monetize all that you're doing? What kind of cash are you talking about? How much cash, and what will you do with that cash?
Well, what we're going to do is slowly we've been testing. We've been working with a partner called Rumble that I think you're familiar with. So we're building our own ad center. So Rumble's built the ad center. We've incorporated it into our platform. So, we are not reliant on all the traditional advertising revenues that are out there. It's kind of the old style. We're building something totally new that's not reliant on big tech. That's something that we've been building. We've been building it into our app. And so as we continue to grow, obviously there'll be more and more people. If you don't want to be woke, you will come and advertise with us. I mean, we're a place where you can reach people who are rejecting the woke ideology. And I've also thought, it also kind of, contributes to the, kind of the larger political scene that we see in this country. And that is that people in the blue states are doing terrible. They're moving and fleeing to the red states. Yeah. We're essentially kind of the same thing for free speech. And if you want to invest in your freedom, and if you want to get away from these woke companies, we're the only game in town. And I think that's why you see people that love America and are betting on America know that a company like Truth Social has to be here for the long term. And look, even after after Donald Trump, one of his best legacies that he's going to leave here is that he truly went out because he was canceled, and many of us were canceled. He went out there, created this company from scratch with very little money, with a small team, and nobody's ever done that. And as much as all that, if you go back 2 years ago, Maria, it was just, this is going to take them $1 billion or more to build. How are they going to do it without Amazon, without Microsoft? It's impossible. Well, we got that. We've been running for a year and a half, open everywhere. We opened up a year ago worldwide. So at this point, we're going to continue to build out that whole ecosystem to make sure that we protect free speech for not only the American people, but people around the globe.
Let me get your take on the investor base because of what you're saying. Do you think some investors then are just people who are betting on Donald Trump? Some investors might be wanting to invest in social media, wanting to invest in that ecosystem that you're believing, but are another portion of the investors people who just think President Trump is going to be president again. Donald Trump's 58% stake in Trump Media now worth nearly $5 billion as of Thursday's close. But the former president's not allowed to sell any of that stock for another 6 months. Some people feel that this could be money that he puts toward his legal fees or his campaign expenses ahead of the election. The company's 7 board members could vote to change that timeline and let him sell some of his stock earlier than 6 months. You're on the board. Is the board considering this?
Well, look, this is one of those things that was conjured up out of thin air by the propagandists and the people who want to see us fail. We've never talked about this. As you know, Donald Trump's on a lockout. People speculate about this. We've never even talked about it. I don't even think, as far as I know, we couldn't even do it even if we wanted to. So, And look, we jump around. The other big conspiracy theory, Maria, is we're back to Russia again. Now, the latest thing, I get up this morning and we have, the fake news and with their typical nonsensical questions. I mean, you'll love this. It's now that this is a way for foreigners, including Putin, to give money to Donald Trump. I mean, come on. I mean, so it's just, we're going to jump. This is just going to be the way that this company, it's why people are going to be attracted to us. People are going to be attracted to us because we're not woke. We're not working with the woke companies. People that are betting on America, betting on free speech, are going to invest with us. They're not going to be buying into these, we go from, Donald Trump's going to sell shares to, Putin's going to give Trump money. It's ridiculous. But that's part of what being at True Social is. Yeah.
Devin, real quick before you go,
having to listen to all this fake news.
Those investors investing in the company now are investing also in you as CEO. Should anybody be afraid that you're going to leave your post anytime soon to go join Donald Trump's campaign or the presidency or his administration if he returns to the White House?
I get those questions all the time. As you know, I left politics because my voice was canceled and millions of Americans' voices were canceled. We are going to build out this entire highway and in perpetuity, it's going to be there. So, look, when that mission is over, then I might go do something else. But right now, we've got a lot of work to do, and I don't think anybody should be counting on any election victories. If they really want to change the outcome in an election, get involved in politics. I mean, that's and partly what we're doing at True Social is making sure whether you're a Republican, Democrat, or Independent, you're going to have a voice, and you're not going to get that on the other social media companies.
We certainly want that. We want that free speech. Devin, it's good to see you. Thanks so much. Congrats on a big week to you.
Thank you, Maria.
All right. Devin Nunes is the CEO of Trump Media and Technology Group. The best start to the year, by the way, for stocks since 2019. Mark Mattson up next on where markets go from here. Stay with us.
Find the real you again. Go to muesli.com/TV.
Welcome back. Markets were closed for the Good Friday holiday Friday, but the Dow and the S&P 500 ending a shortened trading week at new record highs. All three of the major averages higher for the 5th month in a row. That's the longest winning streak for the Dow since August of 2020. And get this, the S&P 500 soaring better than 10% in the first quarter. Its best start to the year since 2019. On Friday, we also got the Fed's preferred inflation gauge showing prices did not budge much from the previous month on the PCE index. Joining me right now is Mattson Money founder and CEO Mark Mattson. Mark, great to see you. Thank you so much for being here. It was a great first quarter. What are you expecting for the second quarter?
Yeah, it sure was. As you said, the S&P was up 10% for the first quarter. Look, I always tell investors, no one can tell you where the next 20% is going to be, whether it's going to be up or whether it's going to be down. And that's why it's so critical to stay long-term focused. Historically, the next 100%, though, is always up. You mentioned inflation. That's one of the things that investors are worried about, and rightfully so. Over the last 4 years, inflation in general is up over 20%. A lot of people are taking money out of their 401ks. They're borrowing money out of their 401ks just for living expenses. So it's been really hard. Salaries and income hasn't kept up with inflation. So even though the market's doing really well, there's still a lot of fear and doubt and apprehension out there. And sometimes people are doing seemingly crazy things, gambling and speculating with their money instead of prudently investing it for the long term.
Well, one of the gambling and speculating to me is about the Fed. I mean, come on. Earlier in the year, we were told that the Fed was going to cut rates 6 times. Really? I didn't believe it then. I don't believe it now. Now we're down to 3 times. Is the market in for a big disappointment here?
Well, a lot of people make the correlation between the Fed and the actual market and the market reacting to the Fed. And of course, sometimes it does. On the long term, though, the Fed has very little real control over interest rates. That they're mainly determined by the supply and demand for money. What I want to warn investors against right now is gambling with their money. There's a lot of people running around now talking about alternatives to prudent long-term investing. Look, U.S. large stocks have averaged 10% long-term, small stocks 12%, small value stocks 14%. But you got people out there talking about the holy grail of investing in alternatives, private equity, private credit, saying you can make 20 to 30% per year. And this is extremely dangerous for investors. Look, if these people knew how to make 20 or 30% consistently, they'd borrow money at 4%, invest it and make 25%, and they would keep all the profits for themselves. Those things have massively high fees. It's a massive gamble. You can't get your money. It's not liquid. So don't fall into that trap. Invest like a billionaire and you'll be a billionaire. Maria, for your viewers, it's just not true.
What do you think when you see oil prices where they are, back up to $83 a barrel? That cannot be good for inflation readings. That cannot be good for the broader macro story. Although I guess if you own energy-related companies, it's good for you as an investor.
Well, obviously, if you have a diversified portfolio, you will have some energy. But when I look at the energy, I look at the problem for our country itself. The broader economy and everyday living, you've got to get energy back under control, and you have to be back in energy independent again. And you can't depend on these foreign countries like Russia and other countries, China, to get your oil from them. We've got to get back to energy independence. And who knows about the election and what's coming after that.
Where are the areas that you want to allocate capital to today?
I think the biggest mistake investors are making, Maria, is they have way too much money in large U.S. growth companies. And that gives you very little real diversification. Okay. There's 500 companies in the S&P. You got small value stocks. There's thousands in that asset category. You have large value stocks. But they also need to be looking internationally. You can't have all your equities just in the United States. You got to have Europe. You got to have Asia. You got to have emerging markets. And that will go a long way to protecting you from a U.S. crash in the market.
Mark, good to see you. Thanks so much.
My pleasure. Thanks, Maria.
All right, Mark Mattson. Meanwhile, a big jolt to the bottom line coming for fast food chains. Major brands warning about higher prices coming, and layoffs have already begun. The chairman of Fat Brands on the real costs of California's minimum wage hike. Next.
We expect the wage increase to go into effect on April 1st. We have targeted a price increase.
Welcome back. Higher wages for fast food minimum wage workers in California having a ripple effect through the industry. The state is set to raise hourly pay to $20 an hour on Monday, but it is coming at a cost to both customers and employees. Fat Brands chain Round Table Pizza is cutting 21% of its workforce by getting rid of 73 driver positions next month. Fat Brands owns hundreds of restaurants in California, in addition to Round Table Pizza, including Fat Burger, Johnny Rockets, and Hot Dog on a Stick. Joining me now is Fat Brands chairman and founder and former Fat Burger CEO, Andy Wiederhorn. Andy, great to have you. Thanks very much for being here.
Great to see you.
So what do you think about this? Increasing hourly wages for fast food workers, what kind of an impact has that had on your business?
Well, someone's going to pay for it. Prices are going to go up. They have to. The operators can't afford it. The delivery driver shift, where we have one of the franchisees laying off 73 drivers, like you mentioned, they're really just going to move them all to delivery drivers for third-party delivery services. So it's not really an elimination of jobs. It's just shifting the cost to the delivery service platforms. But look, everyone wants their employees to make more money, but there's a cost to that, and a restaurant operator just doesn't have that margin. We have 450 restaurants in California out of 2,300 around the world. And, we're already paying most of our employees, or our franchisees are paying their employees close to $20 an hour anyway. So it's not as dramatic as you might think in California, but it's going to creep around the country as other states follow this.
And yet, you've still seen growth. I mean, you reported a good beat in the fourth quarter, but you also had a modest same-store sales miss. Tell me about that. What's going on in terms of FAT Brands and the growth story versus the rest of the industry?
Well, same-store sales was definitely weaker the second half of last year than the first half of last year. And we all know that January was a terrible weather month this year, and February is better, but not amazing. And we're seeing the entire industry sort of climb back out of those January, February doldrums. But, we're growing. I mean, our business, our franchisees are building more restaurants. We have a 1,000 plus store pipeline of stores to be built. So we'll build somewhere between 125 and 150 new stores this year. So there's a lot of optimism overall in the economy, and people are committed to growing each of these brands, their platforms. But the wage pressure is going to drive prices up. You're going to see burgers go up by 50 cents or $1. You're going to see pizza go up. It's just expensive.
Well, I mean, look, we're talking about wage pressures because of this forced increase in the minimum wage, but we also have inflation, right? Oil prices up to $83 a barrel. What are you seeing in terms of inflation, and how are you dealing with it? Are you pretty much passing on the inflation that you have to swallow to the consumer?
So definitely we've seen historically an awful lot of inflation in food costs. That's calmed down quite a bit from where it was a year or 2 years ago. So we're not seeing that much more food inflation today than we did before. So prices were already raised by enough to cover that. But now it's the wage issue. It's much more so the wages than it is food inflation today.
I see. And the wages, who is the demographic of that person who is the fast food worker? Are these people right out of school?
Well, when you have wages this high, it's not really an entry-level job anymore. It can be a sustainable job, but it's expensive, right? So, it's also not just the big chain operators that are subject to this minimum wage increase, because if you're an independent operator and the chain operators are paying $20 an hour, you're going to have to raise your wages as well, or your employees are going to leave and go to the chains. So it really affects everybody there, and it blocks out the young entry-level worker, because now you've got people, maybe you're an Amazon driver, now you want to be a fast food worker because you're going to get this locked-in wage.
What about the growth of the company? I know that you've talked about your recent acquisition of Smoky Bones, adding to incremental EBITDA. Andy, is the growth at FAT Brands coming from acquisitions in the future, or are you looking at mostly organic growth? Tell me about potential for more deals.
Yeah, it's both. We made the acquisition of Smoky Bones in Q4. Now we own the Twin Peaks sports bar chain, and some of those Smoky Bones are going to get converted ahead of our planned IPO of Twin Peaks that we're hoping to do sometime this year. So we've got a lot going on there, but we're still looking at brands. It's a function of price and what makes sense and what don't we have in our portfolio today. We don't have a coffee brand or a salad brand or sandwich brand, so we might look strategically that way. We also have this big cookie factory where we make Great American cookies, the cookie dough and stuff. So there's a lot of opportunity out there, but with rates still high, and as you said, not sure when they're going to get cut and by how much, we're trying to be thoughtful about what we want to buy and when we want to buy it ahead of this.
Yeah, all really good points. Andy, great to have you. We so appreciate it. We send you our best wishes for a happy Easter. Thank you, sir.
You too. Thank you.
Andy Wiederhorn joining us. I've got one important thing you need to know about ahead of next. Welcome back. One thing you need to know about ahead of next week. Peter Cottontail is arriving earlier than usual this year thanks to Easter's earlier start date, but retailers are not exactly jumping for joy. While the National Retail Federation estimates that Easter sales will total more than $22 billion, that's actually a 7% decline from last year's record high. Some companies attribute the decline in sales to fewer days to shop, while others say customers are just simply tired of sweet treats coming so close to the Valentine's Day, Mardi Gras, and St. Patty's Day holidays. Personal finance site Wallet Hub finds nearly 70% of people are planning to spend less this year on Easter than last. But make sure you spend your time watching Mornings with Maria, 6 to 9 a.m. Eastern, weekdays on Fox Business. I hope you'll join me on Monday. That'll do it for us here on Fox Business. Thank you so much for being with us. And for those celebrating, have a very happy and blessed Easter and Easter weekend. I'll see you again next time.